Welcome to the Payment Shed podcast, the weekly podcast that dives into the big topics, trends, and people shaping the worlds of payments, fintech, and business leadership, with your two co-hosts, myself, Grant Evans, and Justin Hanna.
Welcome back to the Payment Shed podcast. I'm Justin Hanna, and I am joined by my co-host, Grant Evans. Today, we are joined by Fines Davey, Group Head of Payments at Kingfisher. Fines, thank you for joining us.
Thank you very much.
Tell us a little bit more about yourself, your background, and the role you do today.
Yeah, so as you say, I'm Group Head of Payments at Kingfisher. So for one, probably worth explaining, Kingfisher, it's a group retail company behind B&Q and Screwfix in the UK and TradePoint, Castorama, France and Poland in Europe, and also Brico Dépôt, which is in France and Iberia as well. So just to give a bit of context there. Been with the business my third year now, which has flown by. And essentially my role is as Head of Payments. The way I describe it in sort of one line quite succinctly is responsible for all things payments, performance, and strategy across the group. So what are we doing now to make sure payments is sort of doing what it needs to and sort of the cliche driving value and not just working, and then applying that sort of long term to what the group strategy, and we call them banners just for context when I say banners instead of brands, applying that sort of banner strategy as well. So just trying to look after things there. And then sort of where I came from was spent a fair while at WorldPay before that. Well, I did all sorts. I joined in 2017, mainly to work on PSD2, which obviously took me on a good, long, interesting journey there and worked across all sorts of things from product strategy, operations and risk. So yeah, I've been in the industry now coming up to 10 years, I think, which in fairness is most of my career at this point. But yeah, it's been good. It's been really interesting.
And you said that merchants are finally recognizing that payment needs dedicated attention, which I guess is why we're seeing people like yourself moving from the payments industry into retail brands as sort of payments leads, right? So what do you think's driven that change from them sitting under IT or finance to having dedicated departments now?
I think, I've got to sort of obviously caveat, I'm not sort of maybe one of these people who's been in payments for like 20 years and sort of seen an enormous change from sort of kind of almost it's not pre-ecom, but I think you know what I mean. But in the last 10 years, I think you've really seen that not just growth of sort of share of wallet of e-commerce, but probably the number of levers that can be pulled within it to turn it from, like say, something that just works to, a value driver, which is sort of the big cliche everyone throws around. And well, it's not a wrong cliche, but I think also certainly when I came into it in 2017, largely sort of spurred on by PSD2, I think what regulation has done and is doing is probably also subtly one of those things that's actually both creating opportunity, but actually in a way creating more complexity, which drives the need for people to come in and actually start looking at this in a little bit more detail.
What typically goes wrong in kind of a large organization when payments isn't treated as a strategic function?
I think it's mainly you just see the focus in the wrong areas, basically. You see that sort of legacy mindset of, well, let's just make sure the lights stay on and keep it cheap. And I think cost is sort of probably one of the biggest areas that just gets too much weight from sort of people who aren't looking at it maybe how they should be. The amount of people I've spoken to where just their focus is cost sort of, and not even having any idea of what they're sacrificing because they're just so one track minded on it. So I think you get the focus in the wrong places. I think you absolutely see sort of certainly within merchants, if they haven't had that kind of moment of realizing how important payments actually is to keeping the business sort of going and achieving long-term objectives. I think you see it really under-resourced within companies in terms of bringing people from the payments industry into the company, not just having it being run on the side of a desk by finance or treasury or whoever it may be. So I think sort of that internal organization perspective and then sort of where the focus is probably sort of two of the key areas that I think if you're not sort of addressing those points, then I think it's probably gonna, I don't know, maybe it sounds a bit dramatic. It sort of creates a little bit of rot in a company that I think as the industry develops and regulation moves on as well, I think you can quite rapidly in the space of 2, 3, 4 years find yourself sort of really quite far behind.
And how do you think that payments ownership piece differs in, mindful that you work at a really an enterprise level brand, right? With multiple banners, as you say, beneath the sort of top tier. So you're a very large organization, but you also have different payment stacks. I mean, you have to think about things in a different way to even a small business. That's a medium-sized business, right? You guys are just at another level.
Yeah, I mean it's big. We're one of the biggest retailers in the UK, sort of mainly behind sort of the big supermarkets, but especially so we've got a federated model where we've got Kingfisher and then we've got the banners underneath, and all the banners have got their own organizations up to CEOs of the individual banners. So it's federated in that sense of they've all got control and autonomy over sort of what they're doing, and therefore sort of before I joined, from a payment sense, they were all in silo making their own decisions around what are they doing for payment solutions and setups and architecture and all that kind of stuff. So I absolutely have like a patchwork quilt of all sorts going on, which certainly does make things, it's both interesting and complicated at the same time, but it's been a really cool learning experience the last couple of years.
And moving from a big corporate acquirer like a WorldPay to being on the merchant side, what surprised you most from that movement?
I think, what I just said, like the learning experience. So at WorldPay, it was very much I had kind of my role in my own sort of niche, as it were. As I think most people who work at acquirers, they have their thing. Like even if you work in sales, like you probably got your vertical or something that you're working on. So you do generally have your niche and your specialty. And what I've really enjoyed being at Kingfisher is now all of a sudden being responsible for all of this. I kind of have to know a little bit about everything. There's so much breadth in what I've got to look into and look after, whether it's fees, whether it's marketplaces, regulation, like pretty much everything I've got to dive into. I mean, it has its drawbacks that it almost means there's nothing I'm going into tons and tons of detail. But at least I've sort of got this really, really broad view, and it's something I've really enjoyed. And certainly when I've thought about sort of my career long term, it's something I think I'll probably really struggle to let go of is having that sort of breadth and being able to kind of have sort of a finger in all the pies as such.
Have you had to get to know ERP systems quite well as well?
No, probably not quite got to that yet. I mean, yeah, not
Dodged
really.
a bullet there then, I think. Where do you think acquirers still underestimate merchant pain points, having worked on the other side of the fence as well? Now you're your merchant side.
I think the pain points are going to differ a lot merchant to merchant as well. Like when you look across the verticals, I mean, the important distinction is there are so many different kinds of merchants, whether it's an airline, a big retail company like us, crypto, or whatever it may be. I think certainly when you look at kind of the big legacy merchants like us, I mean, we certainly don't move nearly as fast as I think a lot of other merchants can. And I've seen examples where perhaps acquirers or other solution providers, maybe they don't get frustrated, but maybe a little bit on the cusp of getting frustrated that we can't move as quickly. And then certainly when you think about what I explained with sort of our federated model of if we want to do something especially multi-banner, then it creates a whole load of complexity. Because actually, if we want to, let's say we want to change something across the whole group, we're not changing something across one company, we're changing something across 6 companies simultaneously and getting them all to buy into that. And they'll all have their own nuances and little quirks that we've got to cater to. And so trying to do anything multi-banner especially is really complicated and quite difficult to drive. So I think these are things that maybe some acquirers, certainly on the face of it, if you're having initial discussions about things, they won't have thought about that. It's only when sort of you really start getting into the weeds of it, they go, oh, okay, maybe this is a slightly different beast.
But then flipping that on its head, having worked in payments, did you feel that when you went into Kingfisher, you were also able to educate the business on regulatory challenges? And if someone says to you, well, why can't that be cheaper? You're like, yeah, this is why, because they have interchange and scheme fees and actually their base cost. Was that something you experienced as well?
As much as we spoke about sort of my own education in it, being able to come in and take something, when you've been in the industry, there's some things you probably take for granted as being quite simple. But then bringing it into a company where, there's not been this sort of big proliferation of payments expertise. And so bringing some of these quite simple concepts and trying to explain them and educate it's been fun, I suppose. Yeah. And we're really pushing to try and actually do a lot more in terms of homegrown payments expertise as well. Like you could just go hire from the industry or something like that. But we've got a number of people who are working towards, so the MRC, for example, is a great platform for sort of their educational material. And so we work with them a lot, and we've got people going through that material, working towards, they do the CPFPP and everything like that. So it's going to be really cool once we start getting the first couple of people who've gone from, they're people who haven't come from a payments background and just from being in Kingfisher are going through this whole journey and sort of working towards our milestone. So when we hit that, I think that's going to be really satisfying.
If you could fix one thing of how merchants and maybe PSPs work together today, what would that be?
I think it's not so much what they work together on, it is a little bit, but my biggest gripe at the moment, which I think really hinders good partnerships in a way, is data. So it's actually one thing that, almost coming back to the earlier question, that really surprised me was how poor some of the data is that you get from sort of acquirers, PSPs. It seems that those with actually good data availability and visibility, I think, are actually in the minority. I mean, WorldPay had a decent product for being able to sort of put it in front of their merchants. And so I suppose I'd kind of use that as my benchmark because I hadn't seen anything else. Why would I have? And then I come over to Kingfisher where, we work with a lot of different acquirers and gateways. And it is certainly, there's not a consistent standard across all of them. Like some of them I've got to create just bespoke. I mean, similarly for learning level, I've learned what some people say is basic, like building my own models and things like that, because I've had to, because these big payments companies just for some reason haven't been able to figure out actually giving us our data in a logical format.
I think there's a payments industry misconception around that though, where we like to talk about customers just want it to work. Well, they want a lot more than that, actually. They want it to work. They want it to be fast. They want the data to be good and accurate and easy to understand. They want the UX and the UI to be really good on interfaces. Like, there's a lot more to it than that. I think we can be a little bit narrow-minded sometimes.
I feel like the data side of things, for me, it's such a basic requirement that in terms of certainly with working with anyone, you've got to have not just good data, but actually deliver it to us in a convenient and sensible way as well. And if you're not doing that, I think it speaks volumes probably about the rest of the company as well.
Definitely.
I wanted to also talk to you about PSD3.
Yeah.
And marketplaces, which obviously you guys sit into, and the commercial agent risk exemption. Or commercial agent exemption risk, I should say. That is a mouthful, that one. Now, interesting you saying you came into WorldPay PSD2 and that was the start. We're now at PSD3, right? So the next conjunction is occurring. Why does this matter so much for marketplaces and slightly more complex merchant models?
I think certainly what sort of I've been learning about, I mean, the PSDs in general, they're obviously massive things. And what we mentioned there, the commercial agent exemption is one small part of it. I mean, you'll speak to some other merchants and they'll be focused on an entirely other part of PSD3 that they're really concerned and worried about. But for us, I mean, we've got 4 marketplaces. And so being able to do that kind of horizon scanning of what's coming around the corner and making sure that we're adapting to what regulation is doing long term to make sure our marketplaces continue to grow is really important. And one area that we identified was, I mean, the commercial agent exemption is to my knowledge, fairly widely used or depended upon, I suppose, across the industry. And it's something that, as much as, at least at the point of recording, it's not been fully published by the European Parliament, but the way things are going, it looks like it's going to be tightened quite significantly. And so the sort of the flexibility being able to depend on it does look like it's gonna change at the end of the day. And what we found, I mean, my view, and I've got a kind of caveat because I've spoken to a lot of other marketplaces about this, and views vary enormously merchant to merchant, but everyone's sort of got their view they kind of stick with and they run with. But our view is look, there's kind of three routes for kind of, I suppose, marketplace models in a way at a high level. And one is you're dependent in some way on the commercial agent exemption, and that grants you a certain degree of flexibility. Two is you've already kind of outsourced that end to end to sort of another provider, and you're not in any way sort of close to performing any kind of payment services. And three is you've got a license yourself, which gives you the most flexibility, but obviously comes with other obligations. And so what we found was, well, if the commercial agent exemption is being tightened and it can't be depended upon, then everyone who is kind of in that bucket one has got to move into bucket 2 or 3. And so you've got to kind of look at, okay, well, what does that mean? And start planning for what we think is probably about 2 years' time. We think enforcement might be for PSD3. Start planning for what that change might mean. And in some cases, I think that change could be quite significant for some merchants. And 2 years is not a lot of time if they haven't figured that out already. So it's something that, yeah, we saw, and I certainly picked up on, and looking at the scale of the potential changes needed, sort of, I've been relatively keen to talk about it a little bit in case there's any merchants out there who've gone, we haven't quite thought about this yet. And yeah, there is, albeit not yet when it's published, and like I say, we think maybe a 2-year enforcement period, there will eventually be a sort of a ticking countdown clock.
Today's episode is sponsored by ISX Financial. Most growing businesses end up stitching together multiple providers to run their payments and banking, leaving them exposed to cash flow, reconciliation, and even security issues. ISX Financial delivers a unified ecosystem with multi-currency accounts, online payments, real-time UK and EU transfers, and global mass payout. Within that platform, Paid By provides Pay by Bank with real-time settlement notifications, automated reconciliation, and integrated refund management. One partner, one integration, helping your business transact with confidence. You can learn more at isx.financial. That's isx.financial. And a big thank you to the team at ISX for supporting the show.
Do you think there's any assumptions that marketplaces are making today that could prove quite risky?
I think one of the assumptions is probably that things aren't going to change, or maybe that's just they've not sort of reviewed sort of the changes that are coming and just assumed, this works today, why won't it in the future? I think one I've thought about is, I mean, sure, I've not heard of penalties or anything being handed out for anyone like falling foul of commercial agent exemption or things like that. I've not heard of anything actually being dished out. Doesn't mean it hasn't, but I've not heard of it yet. But then one thing I think is actually, if they're going to continue to regulate and clamp down on these areas, then surely that's also an indicator of they're going to apply perhaps more scrutiny on it in the future as well. Like, otherwise, why would you bother regulating it if you're not then going to enforce and scrutinize these things in the future? And so I think assuming that nothing's going to change, or things might change, but it'll probably be fine based on what's happened in the past. But this all comes down to risk appetite at the end of the day. And some merchants will have very different views of that than others.
We like to delay these things as well, which maybe makes people a little bit blasé about it sometimes.
True, exactly. God, I can't remember how long PSD2 was delayed in the end, and then it had the sort of bit by bit rollout, didn't it?
Yeah, I
think
think
a long time.
We've done that with a fair few things in payments, to be honest with you. Which brings me on to open banking very nicely as a subject matter. You guys are in that open banking, pay by bank dreamland, right, of high average transaction value baskets in some of your retail brands, right? So naturally a target for the open banking platforms to say, well, you can save a huge amount of money on those high basket transactions. Do you feel like that's like the default answer that you're now getting internally as well as externally? Like, should we be looking at open banking? Are we looking at open banking because these high value transactions and there is a deemed saving that can be made against traditional card payment fees?
I think for pure context, is actually our ATV is probably lower than you expect. It's like, I think between 50 and £70 in the UK.
Is that across all your brands combined though? So do you not have some brands where
Yeah, without getting my laptop out and reminding myself. But in the UK, it's around 50 to 70. And I think a lot of people probably think with like DIY and homeware stuff, you probably think people are going in, dropping a couple of £100 on this and that. And certainly trade customers and things. But it is, at least my view is it's surprisingly low than what I think if I asked you to guess what the ATV was, which does diminish that sort of open banking argument from a pure cost perspective. I mean, I think if you are a high ATV merchant, sure, the argument to do open banking from a cost perspective is there. It's relatively compelling. But I mean, my view still remains that we've looked at it and not progressed it yet, I would say. Because I mean, one part of that is I don't believe the customer proposition is there yet, and it's not mature enough yet. And I think, I mean, we don't really need to go into the details of why everyone knows the headlines of that to begin with. So it's something we've looked at. It's on the radar. It's finding the right use cases, in my view, because we're not that big high ATV merchant at the end of the day.
Yeah, that is interesting, the value there. I would have definitely guessed. I'd have been saying like 150 at least.
Yeah, if I was selling open banking, I'd be knocking on your door every day of the week.
Yeah, it's lower than you think.
I suppose it's because you do have the average that goes in and gets one tin of paint, right? And they might do it screws 3 or 4 times a year, or literally screw. And especially in the trade world as well, right? Because they'll buy one thing and then they'll have to go back because they forgot something.
Yeah, exactly.
But in defense then of the open banking brands that haven't knocked your door down yet, are there risks that could emerge if a merchant or a merchant group become overly dependent on a single payment method?
Well, I think if you look at, I mean, I've heard stories about like car dealerships, for example, who are like, yeah, we only do open banking and things like that. I mean, my view personally, like I said, with the customer proposition, I'll always put something on my credit card if I can. I'm almost a bit annoyed if someone doesn't give me, and they're really pushing pay by bank or just any kind of bank transfer. I mean, we moved house last year. And my wife was getting, I think, quite fed up with me because we've done a little bit of work on things. And so had a few sort of fairly big bills. She was getting really fed up because the amount of times I was like, can you ask them if they take card instead, please? Because it's, I mean, I would even go as far to say as I would pay marginally, only marginally more to put something on my credit card as opposed to do it pay by bank.
Because of consumer protection?
Well, no. The honest truth is I play the points game and try and sort of do things right there. So that's the truth of it, because I get some value back. But I mean, I'm not going to go into detail. I can explain to you afterwards when we're not live. I have had a situation where quite an expensive purchase has gone wrong, and I'm like, well, thank God for that, because I know it because I work in the industry. I'd insisted I'm putting this on my credit card at the time. So like I do have experience where, the customer protection point is really important. Otherwise it could have actually been a real problem.
Did the chargeback system work for you in that instance then?
It's not finalized.
Okay. There's obviously an episode we've recorded recently with an open banking provider that I'd love to run in parallel to this, because the two arguments and sides of that coin, are very interesting to run in parallel. And, you know, the reality of the chargeback system, the legacy nature of it, does it actually work as it's supposed to? But you went straight in and said, I want the points, which is a completely different argument.
That genuinely is the reason. Like,
again, something that needs addressing in Pay by Bank is a higher volume of off-the-shelf points-based products to remove that narrative as well, right?
There's definitely there's an opportunity out there for someone to go and be a loyalty brand behind an open banking provider, right?
Yeah, and it's how, like, figure out the model, how does it work? And I think if you do that, figure out the customer proposition, because sure, several merchants can go put it on their checkout. And look, it sounds like I'm bashing open banking. It's, I suppose, talking about pay by bank. I like it in the right use cases, like paying tax, HMRC, which normally you'd have been like, well, this is a government payment thing, it's going to be terrible. But now actually doing pay by bank on that, like, it's pretty good for doing something like that. So certain use cases, great. It's just I kind of think there's a bit too much emphasis on it at the end of the day, that some people look at it as this messiah that's going to fix all of our problems in the industry. And sure, long term, yeah, it can. But you look how slowly it's gone the last, what is it, nearly 9 years or so, something like that. I don't know. So to get to the point where it is genuinely, I think, what people are hoping it's going to be, that's going to take forever, I think.
But do you look at those redundancy rails? Obviously, card's probably king in your organization, but I guess you'll have invoice-based payments for B2B customers, which they doing bank transfer still, some of them.
We've got all sorts of things going on because, I mean, yeah, we've got in-store and e-commerce, we've got a huge consumer base as well as huge trade base as well. And you've got anything from your sort of small independent tradies up to sort of really big key customers. So yeah, how we accommodate some of those does change in all sorts of ways.
Would omnichannel infrastructure be a much more important thing for you guys
compared to pay by bank?
Yeah.
There's loads of stuff that is a higher priority than pay by bank for us at the moment.
So moving from kind of pay by bank to card payments, the schemes and the power that they have, should merchants kind of be looking about how they ensure themselves against scheme dominance and kind of the inflation fees that seem to happen every couple of years from acquirers that they normally say is down to schemes?
I don't know how much you can necessarily insure yourself. Like, sure, speak about pay by bank and people say, well, put pay by bank and you insure yourself in that. But actually, you're not doing anything unless the customer proposition's there and you're actually getting the adoption of it. It achieves almost nothing. So, like, actually in insuring yourself from the schemes, I think from a merchant perspective, our hands are kind of tied in a lot of senses, and there's a lot of areas where it does feel like we've just kind of got to sit there and take it to a degree. I mean, there are things we can do, and there are levers that can be pulled. I would love to see more merchants working together on something like this. It's something I certainly speak to other merchants a lot about, is how can we work better? And certainly you look at sort of various groups like the BRC who can help facilitate stuff like this. So I'd love to see more of that. And that's a way that it's not really insuring yourself, but actually trying to maybe carry a little bit more weight, because I mean, even what some people would say are the biggest merchants, there's still very little they can do with the schemes unless, Amazons and eBays, which there's been sort of public news about in the past.
Do you guys qualify for any of the Visa Merchant Performance Program type caps as well in your business, even your wholesale businesses in your book? Because there's been some interesting stuff that's happened in that area right around. You said there's no high ATV, but if there is a wholesale element to your portfolio, then stuff like that exists that can help to cap interchange, right?
Yeah. So looking at sort of commercial card interchange and things, and how do we essentially make some headway on what is a pretty big bill for us at the end of the day, because we've got a lot of trade customers. VMPP, it's tough because you've got to, and I was reminding myself, it's you've got to have 50% of your volume over $2,500 in the UK, which means you've got a pretty high ATV. So sort of from what I said earlier, it's we're nowhere near that, or it's your commercial, and it's only debit as well, or your business debit is
only debit.
It's only business debit, it's not credit. So even then, it's still a very small part you can actually influence. But otherwise, if your business debit is more than 75% share of wallet across business and consumer debit cards. So actually, to try and qualify for it, I reckon there's a very low number of merchants and actually volume that qualifies for it. So if people are pushing that, saying, oh, well, there's things you can do for commercial card interchange, sort of raise a bit of an eyebrow and go, it's quite tough to qualify for that.
Going back to what you mentioned around marketplaces speaking more to each other, I've been over the last few months been to quite a few events now where it definitely seems like there's conversations going on. But do you think that the industry could be doing more to help one another when it comes to marketplaces and the brands that sit under them?
Marketplaces or merchants? Or
merchants and marketplaces.
Right? I absolutely think so. I mean, I love trying to get sort of certainly more merchants together and speak to merchants. Like, I'll take kind of any opportunity to go and just chat to people and learn. Because as well, like I said, I've only been on the merchant side now for a couple of years. And there's so many people who've been doing this like their whole careers basically, and so there's so much I can learn from them, which has been fascinating. There's even like one quite cool marketplace opportunity, which it was actually chatting to someone at Tesco's literally over a drink last year, and I was asking him questions being like, we got this problem, like, do you have any ideas, what do you guys do? And we sort of talked about it and came away from that, and we basically had a solution, spoke to a couple of our partners, put it in, hey presto, all fixed. And so just being able to have those conversations and get people together, I think is super valuable.
And you've got obviously European brands within your portfolio, and there's a lot going on with the EPI and Wero and consolidation of local payment methods, or an attempt to consolidate local payments across the single market there. How are you looking at that and planning ahead for that at the moment as an organization?
I mean, specifically like Wero in Europe, again, I'd say similar to Pay by Bank, it's not hugely high on the priority list at the moment. It's something to keep an eye on and see how it develops. Obviously, hand in hand with that is, well, it's not hand in hand, but similar vein of things is the digital euro and what's going on there. So again, that's like a keep an eye on it, which I think is really interesting, sort of at more like less from a Kingfisher perspective, but more on industry level is what's going on. Why is it being done necessarily, and what do we think it'll look like in the future? But yeah, from a Kingfisher perspective, it's a little bit, like I say, it's trying to focus on what are our priorities as a business, which I would say we're still fairly early on in kind of that sort of payments transformation journey. So whereas I'm sure there's plenty of merchants who are like, great, let's be like really good sort of early adopters of Wero or whatever kind of comes around the corner. Like I said, that sort of priority list of the journey of taking payments from sort of that legacy mindset through to sort of where it could be. The priority list is.
But have you found managing, we talked about chargebacks again, and, Visa, MasterCard dominance in certain markets and other schemes, Amex, but the dispute process on some of the local payment methods in markets you guys probably in vary. So has that been something that's been interesting for you to unpack when flipping over merchant side?
I mean, being honest in terms of that question, it's the dispute process on a market-to-market level and different payment methods. It's not something I've even been able to get into the weeds of yet, even in a couple of years. So there's probably not a huge amount I can add on that, if I'm honest.
No, that's fine. That's fine.
What do you see as success for marketplaces over the next kind of 5 years? And the reason why I ask that, we're seeing more and more brands now as merchants becoming marketplaces and allowing more sellers onto their platform. What do you see as success for the industry?
I mean, I think so many, merchants, marketplaces will vary enormously. So what success looks like for them is going to differ a lot. I mean, you look at, one thing I saw on LinkedIn last week, it was another podcast, which I haven't actually listened to yet, but they were saying how Otto Payments in Germany, which obviously spun out of Marketplace there, and they've got 250 people sort of head payments company now.
Mm.
And so you look at like what they're doing, and then when you compare that to us, like we're very much thinking about, okay, how do we make payments sort of lean, efficient, kind of high ROI for now, and make sure we're going after that low hanging fruit, making sure we're looking to the future and planning for that now. And then maybe years down the line, we start to look at slightly sort of broader ambitions from a payment sense, and in terms of where's the value now? So certainly if you compare us to like an Otto, it's very, very different. I mean, the goal for me in relation to our marketplaces is I want to make sure payments is enabling our marketplaces to grow at the end of the day. Marketplaces is a really great lever for our business to grow, which in fairness, DIY and homeware it's not the most flourishing of verticals, and in fairness, we're performing well within it. And one of the reasons of that is the marketplace. So whatever I can do to help those other parts of the business succeed and sort of for the greater good, as it were, fantastic. Like I don't want payments to be the dependency that's holding something up, like going into a new market or whatever it may be. Or like we say with regulation, like I want to be on top of these things so that all of a sudden we're not having this huge issue with our marketplaces that's going to hinder growth or whatever we want to achieve because we haven't had the foresight to pick up on these things.
They kind of feel like the future of retail, don't they? And I know they've been around for a while, but I think it's just scaling, and marketplaces just, they're straddling so many sectors now. It's really been fascinating to watch the growth. It'd be remiss of me not to ask this, because I often talk about Screwfix as one of the pioneers of point of sale tokenization, because they were doing recognition on card, to identifying the card holder and click and collect, right? And using that kind of dual token piece. How do you kind of manage the day to day of having, you know, quite a large point of sale estate, as well as the, you know, the big e-commerce brands that you're operating, and are they completely different worlds to manage from a payments point of view at such a scale?
At the moment, yeah. I mean, Screwfix, yeah. The model is really cool. Like it's so much driven around it, the customer experience and convenience. Like I'm a big fan of, like, I would say if I started my own business, it would be based on convenience. It'll be something that makes life so much easier. And I think that's what really gets it going. I think that's what people really love about Screwfix. But yeah, like you say, when it comes to point of sale, I mean, across not just Screwfix, but all of our banners, I mean, point of sale is still absolutely enormous. Well, it's the majority of our sales at the end of the day. And sure, Screwfix is the highest sort of share of wallet when it comes to e-com versus point of sale, and then probably B&Q. But then certainly you look at our European banners and like very low e-commerce penetration at the moment, which, I mean, in fairness, one of the key pillars of the overall group strategy is we want to increase that e-commerce penetration overall. But yeah, obviously trying to manage sort of that whole estate is a beast in and of itself.
That be enabling a better experience for your customers, as well as enabling a better experience for the sellers on the marketplaces as well?
Well, yeah, when you get onto marketplaces, I mean, all the marketplaces are relatively new at the end of the day. I mean, I think B&Q is, someone's going to call me out on this, it's a couple of years old, or maybe a little bit more than that now. And certainly as it grows, being able to look at that seller experience to help generate more seller growth on the marketplace and let it keep growing and growing and growing. Yeah, that's absolutely something where, from a payment sense, I want to go to our marketplace teams and say, what about this? What about this? What about this? We can do this, and that hopefully should appeal to seller base, make it more appealing and help that growth. So I'm always, trying to look out for ways that, like I said, sort of at the start of this, is how can I, from a sort of payments position, help enable like that growth? Because I think a lot of people would look at it as, well, you can do things that are like sort of purely payments to drive value, whether it's through conversion or whatever it may be. But actually being able to unlock things for other parts of the business, I think is great as well.
Nice.
Very good. Well, it's been a brilliant chat. We love having merchants on the show. I think it just gives a really different perspective to the industry and how we look through the merchant's eyes, because sometimes in payments it can be a little bit forgotten about from the merchant side of the fence. So we have a final section of the show, the Shelf of Shame, where you get to nominate something that really grinds your gears in payments, fintech, business in general. What's your nomination for us today?
Well, you've actually just, I think, alluded to it. I mean, first, like thinking about this, like number one, it would have been too cliched to say like the sales side of things can be a bit of a grind. Actually, the other option was going to be what I mentioned before, was the data side of things. But what, as I say, you kind of just alluded to, that merchants can be forgotten about a bit, I suppose if you're going to say something to put on the shelf, it would be, you probably call it like merchant disintermediation. And people who know me well will have heard me talk about this a lot, where I don't think there's enough merchant representation certainly in circles like regulation or industry groups and things like this. Like you see a lot of things going on without the merchants being involved. And I try and sort of put my money where my mouth is, put my time where my mouth is on this, and give my time to these things and try and get involved and make sure that merchants are being represented. Because in only my sort of 2 to 3 years of being on this side of the fence, I still think the whole community could be engaged a lot more. And in fairness, I probably got to say is actually there's a little bit of, I think merchants themselves could do more to put themselves out there and get more involved as well. And I think it'd be really great to see that.
That's a great call out.
Yeah, I do agree. And it's interesting you mentioned there because sometimes merchants don't want to put themselves there because they're worried about then being sold to off the back of it, right?
Yeah, I think there's that. In fairness, one thing for me is when I came onto the merchant side, it was actually, there was quite a lot of insecurity of I joined the merchant side and there were a few like things that I saw and I thought someone must have already spoken about this or brought this up. And there was a little bit of, surely I'm not the only one seeing this or talking about this, but kind of getting over that hurdle and just kind of getting out there and talking about what either you see, you experience on the merchant side. And it's only been a positive experience kind of just going for it in a way.
Yeah, I think that's a great call out. I'm happy to put it on the shelf of shame. Well, thank you very much for joining us today. I will ask where people can get in touch. It might be risky with our followers to tell them exactly where you are because you might get sold to a lot. But how do people contact you and find out more about Kingfisher as well?
Yeah, I mean, in terms of finding out about Kingfisher, go into our stores, buy some stuff. Would always be a great thing to do. I mean, yeah, I'm on the normal things like LinkedIn. I mean, I'm not exactly posting much on LinkedIn in fairness, but kind of what I said earlier about being in person, I try and get out and about to sort of a lot of events. I mean, we were speaking earlier about, we'll probably see you guys next at MPE.
We will be there.
Like similarly tonight, I'm at an MRC Connects event. And so just, you'll probably see me around.
Brilliant. Well, thanks very much for joining us on the show.
Thank you very much, guys.
Bye-bye.